imagine many things came up. So I'm going to zero in on just a few things that I think are pretty interesting observations. One is the S&P 500 in 2008 was closed at 1378 on this day in 2008. And of course, yesterday it closed at 3787. So pretty significant difference. Unfortunately, after that closed in 2008 at 1378, the following year it closed at just over 900 because of the recession that we were entering into and actually fairly deeply into. The other thing that I found interesting, and this is one that I've really struggled with the name of this movie. It's the new Tom Hanks movie called News of the World. And of course, it's in the 1800s. And I just couldn't quite figure out, honestly, was there that much news in the world in the 1800s? Well, clearly there was. And in fact, the name is indicative of what Michael or Tom Hanks did as a job at that time, and that was he read the news, right? He would go from town to town with newspapers and read the news to people so that they were up to date on what was happening, right? So he'd get on his horse and go from town to town. The newspapers he had probably were months old, and we're able to bring Michael to you today, not with months old data, but really cutting edge stuff. Finally, the last thing I'd mention is that that none of us probably, or many of us probably didn't realize what Zoom was last year in January at this time. Now we all know what Zoom is. Zoom closed on January 29th, 2020 at $76.30. $76.30 a share. Today, it's going to open at $374.39, or an increase in a value of 392% in just 1 year. So, and that's actually hasn't been the high for Zoom over the last 12 months. So with that, we really do appreciate Michael being here for the 14th time. And already looking forward to the next event, which will be the 15th annual. That'll be on January 28th, 2022. So, Michael, it is all yours.
Great. Well, good morning, everyone. Can you see my screen, or do I need to do that myself?
You need to bring up your video and your screen at this time.
At the same time, okay. I should know this. I've done hundreds of these, but got my video on, and now we've got share screen on. You're right. It's early in the morning for me too, so
there you go.
There we go. Good morning, everybody. Hope everyone, I've put headphones on to try and keep some outside noise from getting in, which is inevitable with dogs and children on their way to school and neighbors. So we'll do our best, as we've been doing over the last 10 or 11 months. This has become the norm for me, doing these online presentations like this. So let's get started. I'm going to, we have a lot to talk about. Obviously, when we were meeting 12 months ago, we were talking about COVID. If you remember, it was we were referring to it as more as the coronavirus at the time, but we were talking about it. It was at the time a primarily Chinese problem, and a problem for those manufacturers who happen to have suppliers in Wuhan or in Hubei in central China. That was the crux of it. We were concerned, what is this going to do to the Chinese market? What is this going to do to the supply of iPhones? What is this going to do for car makers who can't get their supplies? And obviously, just a few weeks later, things changed dramatically, and the whole world has been impacted. And that's what we're going to talk about some today. So yeah, as Harry mentioned, we've gone from a small little meeting in a little office space to pretty big meetings at the university in New Philadelphia, back to our home offices and bedrooms and basements and wherever we may be at the moment. But I'm hopeful that next year we can get back together and start to do this in person again. So let's get started. Just a little bit about ISA. For those of you who've attended one or more of these events in the past, you know what ISA does. We are an economic research firm, a firm that helps companies to analyze international markets and make decisions in international markets, whether that be which markets they want to sell their products and services in, which markets they should set up an office or a factory in, etc. So I would encourage you, if you have the chance, to take a look at our website just to learn a little bit more about ISA. So you know the structure of this presentation. It hasn't changed dramatically over the last 14 years, but we do, of course, have to talk about the pandemic to get started. We're going to look at the current state of the pandemic, which direction the pandemic may be going in, and when we can maybe begin to look at a return to something resembling normalcy. We'll then talk about the state of the global economy, where we are right now, where we expect the global economy to go in the next couple of years. We'll talk about politics, both in the US and internationally, how that's impacting the economic outlook in the coming year. We'll look at just a couple key long-term factors to watch. It's important to remember that, yes, the pandemic has had a huge impact on the global economy, but the fact is, once this pandemic is over, and it will be over eventually, those factors that were impacting the economy beforehand will once again be the main drivers of the global economy. We'll take a quick look at different regions around the world just to see how different regions have coped with the pandemic and how their outlook for a recovery is at the moment. We have a few conclusions, and then, as was mentioned, any questions you may have, I will do my best to answer those. So where do we stand at the moment with regards to the pandemic? Well, as you know, the number of recorded cases of COVID-19 around the world just passed the 100 million mark. We know that number, the actual number of cases, is many times higher. How high is up for debate, but many experts estimate that anywhere from 600 to 800 million people have likely been infected with COVID-19, at least. So far around the world. The number of global fatalities, again, these are recorded fatalities, stands at 2.2 million. Again, in many parts of the world, the cause of death is not recorded. Deaths have gone unreported or misreported. So the actual number of fatalities, again, is certainly many degrees higher than this. What's happened in recent weeks, which has been a little bit disconcerting, are these new variants of COVID-19 which have been discovered. One of them was discovered initially in the area around London. We've had another in South Africa, and then we've had another in Brazil's portion of the Amazon basin, in and around the city of Manaus. But what is disconcerting about these new variants is not so much that they are deadlier, because it doesn't appear as if they are deadlier, or at least much deadlier. It's that they transmit much more easily than the original virus. We've seen numbers of COVID-19 cases spike pretty dramatically in those areas where these variants have been found. This has led to major travel restrictions being put in place on those areas. Many countries have cut off all travel with the UK, with South Africa, with Brazil, with other countries where these variants have been found subsequently. And that's raised concerns that in some parts of the world, we may be on the verge of an even more strict lockdown, more strict social distancing measures having them being imposed, with the obvious effects that would have on those economies. So that's something we're watching closely. It's sort of a race against time between getting vaccines out and hoping these variants don't appear in larger numbers in other parts of the world. Now, they've appeared in the United States. I read today that the variant from South Africa was just discovered in South Carolina. I know that the variant from the United Kingdom has been found in New York. I don't know if the one from Brazil has been found in the US yet, but they are spreading, and they do seem to spread the number of viruses significantly higher. these charts are just a couple days old, but they show the trends that we've seen around the world. The number of new cases of COVID-19 per day is averaging somewhere around 600 to 625,000 new cases per day. That's more than double where we were just 3.5 months ago, 4 months ago. The number of fatalities has risen up to almost 14,000 new fatalities per day. That is almost 3 times higher than where we were in the fall. So we've seen significant increases in both. Now, this was expected, of course, for the Northern Hemisphere. It is the flu season. We did expect numbers to go up, but you throw in these new variants into the mix, and it's certain we're going to find more variants as the months progress. But if they are, again, more easily transmitted as the original, then these numbers could yet spike even higher in the coming weeks and months. We'll just look at what's the situation is at the moment in a handful of countries. We'll start with the United States. As expected, the numbers peaked right after the holiday season. There were, in many parts of the country, large numbers of family gatherings, even if they were significantly smaller than in previous years. Nevertheless, that did lead to a new increase in cases, as was expected. You combine that with the fact that it is flu season, and at one point, we were averaging around 250,000 new cases per day. That's down now to around 170,000 new cases. There are concerns if these variants show up in greater quantities in the US that we could see yet another spike in the coming weeks. But at least for the last 3 or 4 weeks, we've seen a decline in the average number of new cases. A couple other countries just to look at to see what the situation is. Brazil, another country which has been hit pretty hard by the pandemic, has seen a spike in the number in recent weeks. And keep in mind, the variant's found in the Amazon basin, so it hasn't really been found in large numbers in the big cities there yet. So if it were to spread to Rio, to Sao Paulo, we would probably see a much bigger increase in the number of cases over the near term. The UK, also another place where we had a variant. In fact, it was the first variant that we identified. You see the incredible increase in the number of cases that were caused by that variant of COVID-19. It was primarily in and around the city of London, and we saw case numbers in the UK rise by a factor of almost 4, just over a matter of about 3 or 4 weeks in December because of this new variant. So it shows you just how disconcerting it is that this variant is spreading right now in different parts of the world. India, just as an example of a country which has brought down the numbers to a degree, and again, India is a country which doesn't report numbers quite as well or in depth as we do in the United States or as the United Kingdom does. But nevertheless, we've seen a downwards trend in a country that was hit extremely hard earlier last year. So that is the news on the virus front. So what is happening with regards to vaccines? Well, the number of vaccines that have been approved, and there are different vaccines approved in different parts of the world. It's up to 11, I believe now. It says 10 on this chart. There was a new vaccine from the UK called the Novavax vaccine, which was just approved in the UK. Probably will be approved in a few other countries with a apparent effectiveness rate of almost 90%. The 2 big vaccines that we're concerned with at the moment that have been approved, of course, are the Moderna vaccine and the Pfizer-BioNTech vaccine. The big news we're waiting for on the vaccine front is from Johnson & Johnson, who are expected to announce their results relatively soon, days, if not the next week or two. They're important because 1, it is a single dose vaccine, and 2, they have the capability to produce 1 billion doses of the vaccine this year. So some of these vaccines, we've seen already shortages in many countries. Johnson & Johnson could be a real game changer, at least in the United States, when it comes to the availability of vaccines. And as you can see from this chart, there are literally dozens of other vaccines which are currently in various phases of testing, including 21 now, which are in the final phase 3 of testing. So the story has been, with regards to vaccine, again, this chart is a couple days old, that vaccine rollouts in much of the world have been disappointingly slow. And in fact, while there's been criticism in the United States of the pace of the rollout, it is in fact significantly faster than in any other large country in the world, with the exception perhaps of the United Kingdom. Uh, the numbers have really accelerated in recent days. And as I mentioned, we're expecting a major increase in the number of vaccinations in the US in the coming months. The goal set by the Biden administration was for 100 million vaccines by the beginning of April. That actually looks feasible. A lot of people were doubtful that could happen because the rollout started a bit slowly, but there is a potential that we have that. Now, the goal for countries, this is what most experts believe, is that when you get to a rate of about 70% of the population being vaccinated, which in the United States would mean about 230 million people, you then really have stopped the spread of the virus and can return to what looks like pre-pandemic living. If that is the case, then the United States could well be at that number by the middle of this summer. We could be looking at a second half of the summer and certainly an early fall in the United States that does look something more like the life we were accustomed to before COVID-19. Now, in other parts of the world, and you see those numbers, the vaccine rollouts have been dreadfully slow. I spent a lot of the pandemic in Europe. They have done a very, very poor job of rolling out vaccines, for example, and they're already facing significant shortages. And it looks like, for example, whereas the United States may well be at the 70% level by the summer, where European countries were hoping to do the same, now it looks extremely doubtful, as if they're going to be anywhere near that number. And then you have countries like China or India, each of which have 1.4 billion people. The governments of both countries have said they don't expect to be able to vaccinate anywhere near enough people until later in 2022. So while the US may well be returning to some degree of normalcy, and maybe a few other countries as well, many of our main trading partners and tourist destinations and sources of tourism, they may well be looking at restrictions and lockdown measures and social distancing measures being kept in place for a significantly longer period of time. So from the living standpoint, yes, we could be looking at a return to normalcy in the US relatively soon, but in other parts of the world, that could well be much later than here. And that would have an impact on exporters, on companies that are relying upon international trade or foreign investment. So that's something we're going to be keeping a close eye on. Of course, maybe we see more successful vaccines come out in the next couple months, and that starts to change the situation for some of these countries. But right now, there's still quite a number of questions. So as I said, the vaccination process has been relatively slow, disappointingly slow in most parts of the world. These new variants, one of the big questions has been, what will the impact of these new variants be on these vaccines? Only one of the main vaccines has been tested fully on these variants. That's the Moderna vaccine, and it is effective against the variants that we've discovered so far. That's good news, but there is some concern that some of the other vaccines might not be as effective against these new variants. And that's going to be a constant issue that the scientists are going to be monitoring, is, can these vaccines, are they effective against the new variants, which will inevitably be found in the coming months. So as a result, we're expecting the US economy, because it's a domestic driven economy, remember only 11% of our GDP is generated by exports, to have the opportunity for a significantly stronger recovery, particularly in the second half of the year. But for other countries, particularly those that depend on tourism, depend on trade, and where the vaccination rollouts are much slower, they could well be facing some significant economic disruptions well into the year after this one. So that's just, again, I'm not an epidemiologist. I'm just here to talk about what the impact of COVID-19 has been on the economy. As we said 12 months ago, when we were sitting in the auditorium in New Philadelphia, we were talking about the disruptions to the supply chain, and we were hopeful that the impact of COVID-19 wouldn't be more than the SARS outbreak years earlier. We were, of course, we were in for a surprise a few weeks later, and now it's the dominant theme that we've been talking about with the global economy now for the past 10 or 11 months. So what about the state of the global economy in the wake of the worst pandemic since the Spanish flu? Well, the global economy, as you'll see in a minute, had its worst year since the Second World War. The US economy, we just received the numbers yesterday, declined by 3.5% in 2020. Now, this is a better result than was hoped for, let's say, in April and May of last year, when most economists were forecasting a decline of around 4.5 to 5.5%. So in fact, the US economy was more robust than had been expected a few months earlier. That had a lot to do with stronger consumer spending. Early on, it was government spending, though government spending fell over the course of the year. But US consumers managed to hold up the economy and to allow it to do better than most large economies last year. Now, in a few parts of the world, primarily China and a few Asian economies, there's already been a somewhat steady recovery from the huge losses they incurred in the first half of last year. But for most economies, the recovery has either been a little less robust, or it's been what we've called an up and down recovery. You had a sharp decline in the second quarter of last year, followed by a sharp recovery in the third quarter, only to find that because of a new surge in the numbers of the virus, that more lockdown measures had to be imposed in late 2020, leading to another slowdown. So as we mentioned, the initial impact of the pandemic was felt by a handful of sectors, but once it got out, it was felt all around the world. Some sectors have suffered incredibly large losses. Think about the sports industry, the tourism industry, the airline industry. But in the manufacturing sector, and many of them, we've started to see a stronger recovery. Manufacturers have managed to adjust to the pandemic. They've adjusted the workplace. Demand, thanks to more robust consumer spending in some parts of the world, has allowed for some manufacturing sectors to recoup some of the losses they had earlier last year. However, in the service sector, it's been quite difficult. The construction sector, not so much in the United States, where real estate has been pretty strong here, but in many parts of the world, it has been hit extremely hard by the pandemic. And in fact, these sectors are going to continue to suffer losses as long as lockdown measures and significant social distance requirements are imposed in parts of the world where the pandemic remains a major factor. So again, it comes down to how fast are the vaccines going to be rolled out? And the longer it takes, the more concern a lot of these sectors have. Imagine, for example, if you will, the tourism sector in many parts of the world. They suffered incredible losses last year, but they've always had the hope that the summer of 2021 would be a year of recovery, if not a boom year, because of all the people who missed out on the ability or the opportunity to travel last year. Well, now there's a concern that a lot of these lockdown measures in parts of the world where tourism is very important may well still be in place this summer. So imagine having, if you own a restaurant on the seaside somewhere, if you own a bed and breakfast somewhere where the summer season is your big money winner, and you didn't have a summer season or a very diluted summer season last year, and now you're facing the prospects of potentially a second summer along those lines. So just how bad was 2020? Well, these are the worst years for the global economy since 1980. As you can see, there's only been 1 year. In fact, there's only been 1 year since the 1940s when the global economy did not grow. That was in 2009, when the global economy shrank by 0.1%. And if you were at some of those early conferences we did, you can remember how pessimistic we were about the state of the economy in the January 2009 event that we did. Well, last year, the economy is estimated to have shrunk by 4% globally. So this is by far the worst year for the global economy in any of our lifetimes. It's the worst year since the Second World War. As we'll see a little bit later, some countries fared much worse than others, but nevertheless, on the whole, this was by far the most devastating year for the global economy in any of our lifetimes, like I said. So how did the world's wealthier countries do? Now, most of these numbers are estimates. The US, we have at 3.6, which was our estimate. In fact, the result which came out yesterday said 3.5, so it was slightly better than forecast. The only other countries which are at the moment concrete numbers are South Korea and Germany. The rest of these are estimates. We have the first 3 quarters. We're waiting on the fourth quarter, some of which I know are being released today. But anyway, they're pretty close to where we expect things to be. Now, no developed economy, no rich economy in the world grew last year. That's really unprecedented. Across the board declines for the world's wealthy economies. In the Asia Pacific region, most of the economies there did not fall as far as others. This is due to more robust consumer demand, a quicker recovery in exports in that part of the world than anywhere else. As far as the US, its performance doesn't look so bad when it's compared to its contemporaries. The big losses were suffered in Europe last year in terms of wealthier economies. We're looking at double-digit or near double-digit declines in economic output in Italy, in France, in the UK, and in Spain. And keep in mind, these were economies that weren't growing much, if at all, in the previous year. So they were already headed for a recession before the pandemic struck. And now that the pandemic came, they suffered huge losses. And these are economies that are very dependent upon trade and investment, and for some of them, tourism. So any further disruptions this year will have a lingering impact on many of these economies and prevent them from recovering as they had hoped for this year. If we take a longer term view, because it is always dangerous just to take the short term view of economic numbers, if we look at how these same countries have been performing so far in the 21st century, we can see that the growth, again, and this is going to be a recurring theme in this presentation, has really been concentrated in the Asia Pacific region so far in the 21st century. North America has not done badly, again, relative to other wealthy countries, but keep in mind, since 2000, U.S. economy has grown 1.8% per year. From 1950 to 1980, it grew by more than 4% per year. From 1980 to 2000, it grew by 3% per year. And now, in the last 21 years, it's grown by less than 2% per year. And this is a theme which is repeated across nearly all developed economies. Growth has been continuously slowing for generations now. And it's a challenge. It means that companies based in the US or based in Europe or based in Japan increasingly need to go abroad, particularly to Asia, to generate additional growth. For some economies, it's really been a difficult time. Japan, almost no growth in the 21st century, and the Italian economy is actually smaller today than it was at the beginning of the 21st century. So we'll talk about some of the factors why that is later, but there's a clear long-term trend, a slowing growth trend in the world's rich countries. Now, in emerging markets, the picture last year was a little more mixed. Famously, the Chinese economy expanded last year. So the virus came out of China. It caused major disruptions in China in the early part of the year. But by the end of the year, China was growing almost as fast as it had been prior to the pandemic. And overall, the economy grew by 2.3%. The only other significant economy, emerging market economy to grow last year was Vietnam, which I think grew by just 0.1 or 0.2% last year. Turkey, we expected to shrink just by a tiny amount. And then really the determination of how an emerging market did in 2020 was how severe were the lockdowns and how severe was the pandemic in those regions. So places like Argentina, which was anyway in the middle of an economic and financial crisis, then got hit by the latter part of the wave of the pandemic in South America, suffered huge losses. Mexico, big losses too. The Philippines, even though it was in the middle of the more successful Asia Pacific region and didn't have huge COVID-19 numbers, it had one of the strictest lockdowns in the world, and it's a much more service-driven economy than most other Asia-Pacific economies. So it too suffered massive losses. And perhaps most important to note is that India's economy is forecast to have shrunk by almost 8% last year. India, they announced their lockdown. It was during the week. They announced it at 8 o'clock in the evening, and the lockdown went into effect 4 hours later, meaning all public transportation was shut down. And as you know, in India, hundreds of millions of people travel long distances to work from their villages, from their small towns. They travel to the bigger cities to work. So 140 million Indian workers could not return home and were left stranded in train stations, bus stations, parks, stadiums, wherever they could find place all around the country. And in the second quarter, what had been one of the fastest growing economies in the world shrank by 24%. Now we've started to see a recovery in India, but it's taking some time, and it's a big jolt for a lot of companies who have seen India as their next big growth market. If we again take the longer term view of emerging markets, we can see that the growth has really been concentrated among those large Asian emerging markets. The Chinese economy growing by almost 9% per year, India 6%, Southeast Asian economies by around 5%. This is far faster growth than we're seeing anywhere else in the world, and it's been now. It's not a short-term phenomenon; it's really a long-term trend. In contrast, you have a region like Latin America, which has been growing by less than 2% per year in the 20th century. This was a region, many conferences where I would speak years ago, this was a region where many businesses were confident that they could generate a lot of export growth in Latin American markets, and that just has not come to fruition because of their very poor performance in the 21st century so far. And this next chart just reinforces that. This is a more near-term view of those numbers. This is since 2014, when we had a shift in the exchange rate cycle and commodity price cycle. Look at how much growth has been generated in Asia's giant emerging markets compared to the rest of the world. Latin America's economy has shrunk. Europe's wealthier countries have barely grown, and even other emerging regions have generated extremely low rates of growth. All of the growth over the last 6 or 7 years has been concentrated in a handful of major emerging markets in the Asia Pacific region. What does this mean for the poorer countries in the world? Well, we've talked in the past about how for the world's poorer countries, they really need economic growth to exceed population growth by a substantial amount. I just used the example of Nigeria here, but it could have been any handful of countries. The Nigerian population is growing 2.6% per year, but look what's happened to their economy since oil prices fell back in the middle of the last decade. No growth at all, essentially. So what does that mean? That means poverty, instead of being reduced, is actually increasing. It means that jobs are not being created, because these fast rising populations mean a lot of young workers entering the labor market, and they're unable to find jobs. So this is something that's being repeated in country after country. I just used Nigeria as the example because of its size, but there are any dozens of countries that we could have used this example for, and the pandemic has just exacerbated this situation. So what kind of recovery was what were we looking at when it comes to the recovery? Now, the hope, of course, was that we would have a V-shaped recovery, right? That there'd be a sharp decline in output in the first half of last year, followed by an immediate recovery. Well, very few economies have followed this path. In fact, China is probably the only one whose recovery looks something akin to a V-shaped recovery. What we're seeing in most of the world is what right now looks like a W-shaped recovery. So a huge decline in output in the first half of 2020, followed by a very sharp rebound in the third quarter, followed by another slowdown as the pandemic worsened in the latter part of 2020 and the first weeks of this year. Hopefully it's just the W, and then the recovery takes off again in the second or third quarter of this year and then continues. That's our hope. I mean, it's possible this recovery could yet look a bit like a mountain range if we continue to have lockdown measures that have to be imposed in the coming months. The worst case scenario, of course, would be something looking like an L-shaped recovery, where some economies lose output and it takes them years and years to get back to where we were. Now, we saw something like this after the financial crisis in places like Greece, or in Italy, where you had the financial crisis followed by subsequent crises. And as a result, those economies never fully recovered from that crisis. And this, as we've seen, has had a substantially larger impact on the global economy than the financial crisis did. So what are our forecasts going forward? These are our average annual economic growth rates for the 2020s. You can see we forecast the US economy to grow about 2.2% this decade. Now, keep in mind, these numbers are being boosted a little bit by the fact that in 2021 and especially in 2022, numbers are going to be inflated because there's making up some lost ground from the down year of 2020. So when you see a country with a growth forecast of about 2.2%, that means that with the exception of the first couple of years, you're looking at an average growth rate of around 1.7, 1.8%. And the same holds true for all of these economies. We expect Asia Pacific economies to grow relatively robustly compared to their contemporaries. The same in North America. European growth rates will be somewhat lower. And again, their numbers are also boosted by the expected higher numbers in 2021 and 2022. Most European countries are struggling now, will be struggling to grow by much more than 1% later in this decade. And then the laggards like Japan and Italy will remain the laggards in our eyes in the coming decade. And we need to keep in mind there's a significant amount of downside risk, particularly with some of these developed economy outlooks. We've seen this slowdown trend. There is still the potential for it to continue. Some of the factors that have been driving it, which we'll talk about later, are still in place. So there's still a significant amount of downside risk on the world's richer countries. As far as emerging markets are concerned, again, Asia, no surprise, growing the fastest. We expect India's economy to eventually recover, grow at about 7% per year over the course of this decade. Southeast Asian economies between 5 and 6%. China, we forecast about 5.1% per year. We expect the Chinese economy, when all is said and done in the 2020s, and we're doing what will it be, the 23rd annual Groundhog Day in 2029, that growth rates in China will be somewhere around 4.5%, if not a little bit lower. Again, demographics are changing in China. There's more competition. It's a middle income economy now, so generating growth becomes a little trickier. So those days of 10%, 11% growth in China are long gone. And but still, an economy of a country with 1.4 billion people, an economy of that size, 4.5% growth would still be a significant driver for the global economy. Elsewhere, we expect a recovery in Latin America, but not a very robust one, growth of about 2.3, 2.4% per year in that region's bigger economies. And then in the commodity producers, we're not expecting major increases in most commodity prices. Yes, there'll be some trending upwards. There has been over the last couple months, but we don't foresee, for example, oil prices returning to the levels they were at in 2013 and early 2014. There's just so much supply out there. Demand is not growing as fast as those commodity producing countries would hope for. And as a result, their economic growth prospects are not quite as bright. So that's the outlook for growth. What else is happening, or what has been happening with regards to the global economy? What about trade? Now, if you've seen me in the past few years talk about how global trade growth levels have been disappointing, really dating back to the 2008, 2009 period. You see what happened after the financial crisis when global trade declined in 2009. It never got back to the trend level that it was at over the previous decades. Well, we've seen another decline in exports in trade this year, or last year, excuse me, and we expect the same. So in essence, there's been almost no growth in global trade over the last 12 years when you take into account these two crises we've suffered from. And that's had a huge impact on countries that are dependent upon generating exports for growth, for companies that need to export to grow. It's been a major challenge for many of those entities. If you look at it from the US perspective, a trade deficit has been a hugely political issue in the United States. We saw in the 2000s, the early part of the century, a huge increase in the trade deficit right up until 2006. It shrank dramatically in the wake of the financial crisis, and while it grew again, it did not return to those levels of earlier years. In fact, it didn't really until 2020. We saw a huge increase in the US trade deficit in 2020, particularly with China, which is a little bit ironic considering that we were in the middle of a trade war with China. But you see the trade deficit shot up last year to its highest level since 2009. And this is going to be something, since 2008, excuse me. This is going to be something that is going to be a big political issue in the United States this year and in the coming years. The trade relationship between the US and China is still a very contentious issue. Just because there's a new government in Washington doesn't mean there's going to be a big change in policy. We don't expect there to be. In fact, in terms of the Biden administration's approach to trade with China, as from the Trump administration's approach, we don't expect a significant shift. While there's this trade stagnation and decline in some cases, there has nevertheless been a proliferation of trade deals going on just over the past year or so. If you look at the Asia Pacific region, which is really the hub of these trade deals, you have the CPTPP, which is the old TPP trade agreement, which the Trump administration pulled the US out from in 2017. It's very likely the United States will rejoin that one soon. It was seen as a counterweight to China's influence in the Asia Pacific region, which is why it had broad support from most sectors of the US, but nevertheless was something that was immediately the Trump administration immediately pulled the U.S. out from. We expect the U.S. back in that one. But in the meantime, just over a month ago, there was the RCEP, which was signed. It's an investment deal across the Asia Pacific region. It includes China, it includes Japan, it included India right up until the last moment, what they withdrew. So we're seeing these major trade agreements go on in recent years without the United States in the region, which is generating the most economic growth. We expect at least the US to get back into what is now known as the CPTPP. Of course, there have been other trade deals. We talked about this one last year because it had just been signed when we met in person last year. It was the US-China Phase 1 trade deal. As I predicted, the terms of the trade deal would never be met. They were ludicrous, quite frankly. We saw that happen. It was happening before the pandemic. Certainly the pandemic made the targets of that trade deal moot because the Chinese import targets would never be met. There were some cases where it was an advantage for some US exporters. Think about soybeans, for example, which Ohio, of course, is a big producer of. There was a major increase in soybean exports from the US to China, due in part to this trade deal, but in general, most of the targets were not met. At the same time, the NAFTA successor was signed last year, the USMCA, so the US-Mexico-Canadian Trade Agreement has been signed. It's really nothing more than a tweaking of the NAFTA deal. Just a few weeks ago, there was an investment deal signed by China and the European Union. This really angered the Biden administration, who was pressuring the European Union to join it in taking a harder line against China. And instead, driven mostly by Germany, the EU went and signed a pretty comprehensive investment deal with China. And at the same time, we've had the European Union, United Kingdom post-Brexit deal, which was signed at the last minute in December. So there's been a flurry of trade activity, despite the fact that trade itself has been quite stagnant for the past 12 years. As far as the dollar is concerned, a lot of the talk has been about dollar weakness. The dollar is depreciated by about 15% since the beginning of the pandemic. That's good news for US exporters. But if you look historically, the dollar remains quite strong, even with that 15% depreciation. So there is some room for a further depreciation of the dollar. A couple things could bring that about. One of them is that if the Biden administration pumps a lot more money into the market and into the global economy, which is likely, that we could see a further depreciation. If the pandemic situation improves and the outlook for growth improves, investors will likely become more willing to take on risk, which would also drive down the value of the dollar. So there is the possibility that we could see another, I don't know, 10% depreciation this year. It's no guarantee. The dollar remains in demand. The U.S. Economic outlook is brighter than that of many other countries that have major currencies. So it could go either way, but there is some room for further depreciation. And that's the fact is, when you're coming out of a recession, you want your currency to weaken. It boosts your export competitiveness. It's a real important tool in your arsenal to get back to growth. So for me, the fact that the US dollar has declined since the pandemic has been a positive development. We're not facing at the moment significant inflationary pressures. We'll talk about that in a minute. In fact, we'll talk about it right now. There are some concerns in the US about inflation because of the weaker dollar, because of all of this money that's being pumped into the economy. There are concerns that we could face the threat of inflation. I'm not as concerned as some economists about that. I think inflation could go up a little bit. We could be looking at inflation of close to 2%, which is anyway what the Fed is targeting. But I don't see rampant inflation on our horizon. For much of the rest of the world, in fact, the problem remains deflation. There's deflation currently in China, in the Eurozone, in Japan. Inflation rates are negative in most major economies right now. This plays an important role when we talk about interest rates and debt. Now, interest rates right now are as around the world, in most cases, as low as they've historically been. They probably, in some countries, we won't be seeing interest rate hikes anytime soon. Europe has basically ruled them out for some time. There's talk maybe towards the end of this year, early next year, the US may start to go up. We're going to watch that closely because that's going to play a big role. I thought it was the next slide, must be one over, on our ability to pay off debt. And I'll just skip it. I'll just talk about the debt now then. Countries have taken on huge amounts of debt over the pandemic with the confidence that because interest rates are so low and because inflation is low, there's less pressure to raise interest rates, that it's not that hard for them to pay off this debt. Now, if, let's say, for example, there would be an inflationary spike and central banks were forced to raise interest rates, that would suddenly make it much harder for governments to pay off all of this debt that they've accumulated, both in the pandemic and in previous years. So something we're watching closely. It does bear watching over the longer term. Now, another issue, of course, is unemployment. We saw unemployment in the United States rise to more than 15% in the early part of the pandemic. It's already fallen to 6.7%. Now, yes, quite a few people are still out of the labor force, but it is unlike the slow reduction in unemployment that we saw in the wake of the financial crisis. It was a very quick change, and we've seen that in many parts of the world. Remember, we've in recent years have been talking about labor shortages as being the one of the biggest drags on the U.S. economy, on most major economies in the world. I think by the end of this year, early next year, we're going to be talking more about labor shortages than unemployment again. The demographics dictate that the economy is on its way back. Again, labor shortages, the tight labor market are going to be a big issue that all of these economies are going to be dealing with from now on going forward. I mentioned the debt, so I won't go back into that. We've raised quite a bit of debt this year. Government spending soared in most parts of the world early on in the pandemic, and governments are hopeful they can pay it back as long as interest rates are so low. That's quite feasible as long as the economies return to growth as well. The danger is, the worst case scenario, of course, is the stagflation that we experienced in the late 70s and early 80s, for example, where the economy is not growing much and inflation rates are incredibly high, forcing interest rates to be quite high. That will make paying off this massive debt a much bigger challenge than it is right now. So what has happened with all of these changes? Well, we're seeing a shift in the economic poles towards Asia. There are, of course, still three main economic regions: North America, Europe, and Asia. But Asia has emerged as a big winner, in not just in the pandemic, but in recent recent decades. It now accounts for a larger share of the global economy than any other region, which is no surprise when it's growing. It has such a large population and is growing so fast. Just one other thing, we looked at trade and investment flows, and we'll talk about that a bit later before we're finished, just how much that shifted to the Asia Pacific region, even more so than the economic output in recent years. We need to, of course, talk about politics a little bit. There are a few political issues we're watching in 2021, which will have a big impact on the economy. Those are the fact we have a new administration in Washington, the fact the US-Chinese rivalry is still there. And it's not just China's rivalry, it's not just with the US, it's with many of its neighbors as well. We have a flashpoint we're watching in the Eastern Mediterranean, which has become quite dangerous. And there are some interesting elections taking place around the world this year. Hopefully they'll all be concluded faster than our election in the US was this year, but they do bear watching. We obviously have a new president, a new administration in Washington, a very tumultuous time in US politics, certainly the most volatile time since at least the late 60s and early 70s. We've seen some rather shocking events in recent weeks. The Democrats now control the government. They control the presidency. They have the slimmest of majorities in the Senate. They have a shrunken majority in the House of Representatives. So they are nearly free to pass most of the policies that they have promised in recent months. How that will play out remains to be seen. We're still recovering from the events of the past few weeks, but there are some major changes that are taking place. And what we're seeing in essence is, if you think back decades ago when we would shift between a Republican and a Democratic controlled government, policy changes, of course they took place, but they were not as dramatic of a reversal of policy as we've seen in recent decades. If we think back to even back to the 1990s, from the George H.W. Bush presidency to the Clinton presidency to the George W. Bush presidency, policy changes were big and substantial, but they were nothing like the essential reverses in policies that we see now. The Trump administration basically came into office with the goal of reversing the Obama administration's policies. The Biden administration has come in with the goal of reversing the Trump administration policy. So we're seeing an incredible swing in policymaking in Washington. And this makes it difficult for companies that are doing business in the US, for potential foreign investors here, to have confidence that the plans they're making long term are going to be able to come to fruition because of these dramatic shifts in taxation policy, in tariff policy, etc. For me, the most important foreign issue facing the Biden administration is the United States' relationship with China. It is the key relationship of the 21st century. There are numerous flashpoints between the two sides. These were already coming into the fore before the Trump administration was in power. They just grew exponentially during the time of the Trump administration, are all going to remain in place during the Biden administration. The trade relationship, which is quite fraught. We don't expect the Biden administration to reverse many of the Trump administration's policies on this one area, because there is a popular consensus that the US should take a harder line on trade with China. The technology sphere, of course, is a huge point of contention between the two countries. China is increasing defense spending by about 10% per year. And of course, there are debates over Taiwan, China's claims to the South China Sea, and others. And that also includes many of China's neighbors. We've seen last year, we saw Chinese and Indian armed forces fighting in the Himalayas. There was just a clash there last week between the two sides. And that's just one of many disputes that China right now has among its neighbors. And this is important because, as we've seen, this is the region that's generating most of the world's economic growth. So if there's an increased level of political volatility in that region, it bodes ill for the outlook for the global economy. One other area we're looking at as a dangerous place in 2021 is the Eastern Mediterranean. There's a high degree of tensions between countries like Turkey and Greece. There's conflicts in Libya, there's conflicts in Syria. There are a number of issues which are making this region, which has already been volatile for some time, increasingly volatile in the coming year. As far as elections go, there's quite a few of interesting elections to watch. Some of them I would look closely at. The election in Hong Kong, because we've seen the crackdown on the pro-democracy movement by China there. Russia has an election at the same time. There have been some protests against President Putin in recent weeks. The Russian economy has done quite poorly. The country's been hit hard by the pandemic, so popular anger has risen there. The Germans have an election that same month. There's quite a few elections which could be quite consequential over the course of this year. As always, we have to look beyond the pandemic, because as we're hopefully when we're meeting next year to have the 15th annual Groundhog Day event, we'll be talking about more mundane issues like demographic changes and trade and investment and productivity and the environment. And hopefully this pandemic will start to get into our rearview mirror. But these are the issues over the course of the coming years and the coming decades are going to determine how well an economy does or not. As we talked about many times, demographics are proving to be a much bigger drag on the economy. Now, many people were hopeful, many demographers were hopeful that the pandemic would result in more babies being made. People couldn't go anywhere, people were stuck at home, but we've seen a couple countries already release their birth rates for 2020, and they're dramatically down. We've seen that in parts of the United States. We've seen it in Australia, a couple European countries. The birth rates fell even further last year. So that means just down the road, there's going to be less workers and less consumers entering the market, something that's been happening for decades now. And that's a huge drag on the global economy. Populations are getting older. That's another trend which has been continuing for some time. We need to find a way to make our older population more productive. Too many parts of the world do not utilize this segment of the population, and that's economically a recipe for disaster, both in terms of wasting valuable resources, but at the same time, it's proving to be just a massive drain on public finances, that this increasingly large segment of the population is not productive in many countries or many parts of the world, but is receiving very large benefits for retirement, which they had paid for their entire working career. But it's just becoming too much to bear, especially in a world where economic growth is much lower than it used to be. So how is the world going to react to this? It's going to be one of the big questions of the 2020s. At the same time, working age populations are shrinking. They're declining in China, they're declining in Japan, they're declining in most European countries. They're slowing, the growth is slowing in the US and Canada. It's a huge issue going forward. We've talked about this many times in the past. It's going to continue to be an issue. One worrying sign is that in the pandemic, we've seen in the United States and some other countries that an increasing number of people in the working age population have simply withdrawn from the workforce. There are estimates of over 10 million people having withdrawn from the workforce in the United States. They're not looking for work. So not only is the working age population declining, but a segment of that working age population isn't even bothering to be a productive member of society anymore. So that's a very worrying concern as we go forward. And again, that's why I say labor shortages are going to be back as a big issue, in my opinion, within 12 to 18 months. At the same time, we talked about how trade growth has slowed. We've seen dramatic falls in trade in 2020. It fell with the notable exception of China. Last year, an even bigger change has been in terms of foreign investment flows around the world. They fell dramatically last year. Foreign investment in Europe fell by 71% last year. In the United States, it fell by 47%. In contrast, foreign investment into China increased last year by 4%, despite the pandemic, despite the lockdown, despite the fact that you couldn't really travel to China at all. They still realized an increase in foreign investment of 4%. That is, if nothing else, that is the statistic that shows you just how much of the economic weight of the world is shifting to China and to the Asia Pacific region. We still see levels support for protectionism and support for nationalist policies on the rise in many parts of the world. This has led to increased support for politicians and political parties, both on the far right and on the far left. In many parts of the world, these are parties and leaders who are generally hostile to trade and investment. And that's a concern, because we've seen many of these other factors that have been impacting trade and investment. This one is not going away. Even with some elections in recent years suggesting that maybe support for those policies has peaked, if we see economic struggles continue for a longer period of time, we will likely to see support for these type of policies continue to grow. At the same time, we have localization and reshoring. That's a trend which could benefit a place like Ohio, obviously. You've seen businesses moving production facilities and service centers closer to their end users, and there are many factors which are influencing that. That well could continue in the 2020s, and for many parts of the world, that would be disastrous, particularly for poorer emerging markets. But for, let's say, old traditional manufacturing centers, this is an opportunity for them to regain some of that lost manufacturing that they've experienced in recent decades. We talked I think it was last year, we talked at length about productivity. It's been slowing for decades, as we talked about last year. There has been some hope that the pandemic would lead to some breakthroughs in terms of new processes of doing business, new production methods. There have been, in their very initial figures, some positive productivity numbers coming from last year, but again, it's hard to measure those, to measure their impact on such a short-term basis. We'll really have to look a few years down the road if those changes that occurred during the pandemic last, if they stay the same, or if they were simply a result of the pandemic and they dissipated within 1 or 2 years. So that remains to be seen. But again, if we don't increase our productivity, we're not going to grow faster. It's as simple as that. The demographic situation is what it is. Trade and investment is not going to grow substantially in the coming years. It's going to have to be productivity that generates growth. And of course, on top of all of this, we do have to keep a very close eye on what's happening with the environment and the climate. And this is just a chart that shows the economic cost of climate-related environmental disasters in the United States since 1980. And it's irrefutable proof that there has been an increase in climate-related disasters in the 21st century. And we could put this chart up for Australia, we could put this chart up for Europe, we could put this chart up for East Asia. It would look almost exactly the same. We have seen, temperatures have risen, and as a result, we have seen more stronger storms. We've seen worse forest and wildfires. We've seen in many parts of the world very severe droughts. We've seen in other parts of the world increased rainfall with much more flooding. It's something that is going to have a bigger and bigger impact upon the economy, particularly upon the economy of regions that are impacted. Think about what's happened in California in recent years with all of their wildfires. The same thing in Australia. Think about the threat to major economic centers in the Gulf of Mexico and the Caribbean because of the increased number of powerful hurricanes in the region. So these are all things that are going to have an impact on the US and the global economy in the 2020s. So to finish up this bit, I'm just going to take a brief look at some individual outlooks for regions to see where we expect regions to go in the coming year and the coming years. We'll start right in the US and Canada. We are forecasting stronger recoveries for the US and Canadian economies than for other rich countries in the world. There is some concerns among economists of inflation in the United States. We're not quite as concerned, but it is not something that should be ignored. The fact is that the US has truly benefited from its very strong position in high tech and high growth industries. That has been really what has separated the United States from many of its contemporaries through the pandemic and in previous years, is that the fact that so many of the most successful companies around the world in recent years are based in the United States has had a huge impact on the US economy, preventing it from performing much worse than it has in recent years. Because when you compare the performance of traditional industries in the United States and let's say the traditional industries in Europe, there's not a big difference. It's really in the high tech, high growth ends where we're seeing growth being generated in the US. We're watching the political climate in the US. It remains extremely polarized, extremely volatile. We don't expect that to change anytime soon. The rhetoric from both sides is dangerous at the moment. We're seeing people are now sourcing their information from quite let's say, if you will, biased sources of news on both sides of the political aisle. Centrism, which was once a very powerful force in US politics, has been really pushed to the side in recent years. And that is dangerous because I've said we are, even in terms of policymaking, we're a country where one administration has the goal of simply reversing the policies of its predecessor. So those are some things we're looking at in the US and Canada. If we go south to Latin America, this is a region which is, as you've seen, has performed really poorly in recent years. Economic output today is smaller in most Latin American economies than it was 6 or 7 years ago. We do expect a bounce back, particularly in Brazil and Mexico, but we're not looking at 7, 8, 9% growth like was hoped for in those countries 7 or 8 years ago, but something more along the lines of 2 or 3% per year. There are a number of countries that remain in crisis, whether it be Argentina or Venezuela. It's another region where political polarization exists, popular anger is very high. This was a region that just before the pandemic was suffering from huge numbers of major protests in major cities across the region. And that well could resume as the pandemic eventually winds down. Now, unfortunately, this is one of the places we're watching closely as one that could take much longer to get the vaccine out than in, for example, the United States. Mexico has already said they are struggling to obtain supplies of the vaccine. It could take, for example, Mexico well into next year. So they've provided enough vaccines to return to some degree of normalcy in that country. If we cross the Atlantic and we go to Europe, this is where some of the biggest economic losses of 2020 were realized. We do expect 2021 to be a year of recovery, but as I said, there's been a very slow vaccination rollout in Europe as well. So this is, again, if they cannot improve their performance in that regard, this could be another disappointing year for a region which has generated very, very little growth so far in the 21st century. If we look at Africa, again, this is a region that many economists believe will generate more long-term growth than any others. But in fact, over the past decade, there's been very little growth generated in this region. If most of the countries in sub-Saharan Africa, they're commodity exporters, so it could be agricultural products or oil, and commodity prices have been relatively low in that period. So they've not been able to generate much growth. And keep in mind, we've talked about this in the past, this region will add 1 billion new people between now and the year 2050. So it's an opportunity. Yes, it could be new consumers, new workers, but at the same time, if this region can't create enough jobs or its resources are not enough to supply this incredible increase in the number of people, we could see dramatic increases in the level of unrest in this region. And again, this is another region where providing vaccines is likely to take a long time. Now, the region has not been hit as hard as most others. There's far fewer elderly people living in this region. This is a region where many diseases are prevalent, so they know how to deal with outbreaks. It's something that's a regular occurrence in many areas of sub-Saharan Africa. That's why we don't see the high COVID-19 numbers in that region, as well as the lack of testing, of course. But nevertheless, bringing vaccines to this region could take quite some time. In a similar situation in the Middle East and North Africa, the oil-producing countries have not grown much at all in recent years. Only those economies that were more diversified had performed relatively well, so countries like Israel, Turkey, Morocco. But for the oil-producing countries, where most of the wealth in this region is concentrated, there's been almost no growth in recent years. And of course, we still have far too much unrest and conflict right now in this region, which is destabilizing all too many countries there. You have Central and South Asia, which is of course centered upon India. We mentioned that India's economy suffered terribly last year. We do expect that the return to growth of around 7% per year, similar numbers for Bangladesh. This is a relatively poor region, of course, but for many companies, this is seen as the next step in finding the big growth markets from China and Southeast Asia. The shift moves westward into Central and South Asia, something we're watching closely because, again, a lot of companies' growth forecasts depend upon India and its neighbors rebounding in the coming years. And then finally, the East Asian Pacific region, We expect China's recovery to continue over the near term. Growth will gradually slow over the course of the decade, but China has come out of this pandemic with its influence on the region and on the world enhanced, if anything, which is something that's hard to imagine when we consider where we were a year ago and China was shutting itself down because it was the source of the pandemic. And now it's emerging from the pandemic as one of the big winners, if you will, from the pandemic, despite the fact that much of the world holds China accountable for it. A hugely significant development. And we saw something similar after the financial crisis. Now, the financial crisis had nothing to do with the Asia Pacific region, but its influence, its strength was dramatically enhanced by that crisis. We're seeing a similar development take place as a result of this year's crisis or last year's crisis. So what should we take away from all of this that we've just talked about? Well, first of all, we always need to keep in the back of our mind the drivers of economic growth, because again, once this pandemic is over, these are the issues we're going to be talking about. So how can we revive trade and investment? It's been over 12 years now that we've been unable to generate higher levels of trade and investment. We need to find a way to boost growth there, because there's not that many other sources of growth at the moment. Demographic growth isn't coming back anytime soon. You don't just suddenly increase your workforce by 30%. That's going to be a major drag on the economy. So it means productivity growth is going to have to be the key driver of growth for the future. And right now, at least over the near term, it's all a question of which countries can return to normalcy as quick as possible. We are more bullish on North America being able to do so than most other parts of the world. We expect disruptions to continue in Europe until the latter part of this year. Asia, similar story. And then in many emerging markets, probably sometime next year, we're looking at a return to normalcy. So it's going to be a gradual process. There's still a number of potential pitfalls in the terms of new variants of the virus, of vaccination problems that have been unforeseen at the moment. So many things to look out for.
There we go.
There's still a few things that I have that are making me a little bit worried. I mentioned the near term. We expect the number of virus cases to rise over the near term thanks to the new variants. There's already these vaccine distribution problems have already been seen in many parts of the world. I mentioned protectionism and nationalism. And the fact is, we've had 2 economic crises now in 12 years. Are they anomalies, or are we now really in the midst of what is a long-term global economic stagnation? Of course, finally, to conclude, we have a couple things that are giving me hope. It's not all pessimistic. While the initial economic downturn from the pandemic was quite severe, in fact, the recovery that took place in the months afterwards was stronger than anybody expected. The worst case scenarios for the near-term economic performance last year did not play out. That's a positive. We're seeing in some parts of the world, you would call it a sensible reallocation of resources. There are many industries which countries and governments were throwing too much resources at, which were not generating growth. We're seeing now some of those resources being transferred to more productive segments of the economy. Again, maybe the pandemic will help us reverse those long-term productivity declines that we've been dealing with. And then finally, we did prove earlier in the pandemic that we could improve our environmental footprint while still maintaining a global economy. Maybe we can learn from that and start to have a more global environment, a global economy that's both more environmentally friendly, but is still able to generate growth. That's really the key over the long term. We need to generate growth. That goes without saying, but we need to do it in a more sustainable way. So that is, for me, one of the long-term issues that we need to address. So that is it for me. That's my, if you don't have a question now and you think of something, or you have a question about ISA or about myself, anything, there's my email address. You can take a look at our website as well. So if anyone has any questions, I'm happy to take them. I will stop sharing my screen, so I will hand over to the moderator. Who is moderating us right now?
Michael, this is John Kelly. We did have a number of questions in the chat and some conversation going on.
Oh yeah, I can go into the chat, I think.
Well, let's see. First one was, how do you think General Motors' announcement to move its fleet to all electric in 2035 will impact the U.S. and/or global economy?
Well, I don't know if it'll have much of an impact on the US or the global economy because they're not the only ones who are doing this. Many automakers have announced similar plans. It is the trend. It will have an impact on oil producers, of course. We've seen a trend in recent years where oil producers are basically trying to produce as much as they can in the short term, knowing that down the road, 15, 20 years, demand for oil and gas is going to be lower than it is now, or at least it's not going to grow at all. This just reinforces that notion. You have many countries who are putting in regulations now that a certain share of their car park has to be electric. In fact, in some places, all new cars will have to be electric by the 2030s. So GM is just following that trend. It's not shocking. We knew these kind of announcements were forthcoming. So I think the oil industry, for example, is aware that such moves are going to be made, even if they act surprised. So the impact should be relatively minimal. Of course, now, if you're a country or a part of the world who's completely dependent upon oil to generate growth, it's just another sign that you need to diversify as quickly as possible. They're trying to. You look what's happening in Saudi Arabia and other parts of the Gulf, of the Persian Gulf. Those economies are desperately trying to use the oil money they're making now to create new industries, new sectors of the economy, to prepare themselves for a day when oil is a much smaller component of their economies.
Thanks, Michael. This is Jason. A follow-up to that question, John Elsasser asked, how and where will we get electricity for a significant electric vehicle fleet without investment in nuclear and a major investment in the grid?
Yeah, that's a good point. There's ambitious plans for renewable energy, of course, but it is unproven so far that if that can supply such a vast demand for electricity, the grid is going to have to be completely overhauled. That's one of the big segments of global growth in the next 10 or 20 years, not just in the US, but particularly in emerging markets who are suffering from dramatic electricity shortages at the moment, is investment in power generation, in investment in the grid. In terms of nuclear, yes, many experts have argued for nuclear as the most viable source for power generation. Of course, popular opposition to nuclear energy is quite strong in many parts of the world. So that's really a balance there. If it can be proven that renewables can provide the energy, that's obviously the way to go. And I've always argued that the US should be investing more there because the US has the technology and the ability to really dominate that industry. It's really a potential high growth industry for the US. But still, when we're looking at supplying energy for such a vast population, vast country, it remains to be seen if we can generate that type of power over the near term, some of these dates that have been mentioned, by renewables. So yeah, it's a good question.
Another question is about the climate change. Is the economic impact of climate-related disasters because disasters are bigger and more frequent, or because people have moved to areas where these disasters hit? Example, the Gulf Coast, California.
It's both. It's absolutely both. We've recorded just the places could be completely empty. For example, the two hurricanes that hit Nicaragua in November were some of the most powerful that have ever hit Central America. Fortunately, they landed on a stretch of coast where nobody lived. So the storms are becoming more powerful and more frequent, but the populations in areas where the storms are hitting are stronger. And as the cities in those areas grow, typically the cities are built on the highest ground or the safest ground, and then spread. And as some of the extensions of the city go into much more dangerous areas. So we're seeing it's both population growth in places in Southeast Asia, in the Gulf of Mexico, are growing. And then at the same time, when you look at from the other standpoint, the warming climate, we see what's happening in California, in Australia over the last couple of years in terms of wildfires. Same thing, suburbs are stretching into the hills, into the forest. These forest fires, which they're natural occurrences, but they've been intensifying in recent years, are reaching into populated areas. So it's a combination of both.
Great. We have another question from Jennifer Mikiels, and she would like to ask, do you think the political polarization is influencing people's not wanting to engage in the labor force? And she states an example that Northeast Ohio continues to be hindered by labor shortages.
Yeah, it may play a role in it. I think it's more that in the past, if you had relatively lower skilled, it was always easy to find work, especially in manufacturing centers, because there was always a demand for even lower skilled labor. That doesn't exist as much now, and also much more of it is focused on the service industry. It's just my opinion. There's not that much empirical evidence for this, but I think people, when they were building things, lower skilled labor were building things where in the past, it was agriculture. They owned the land. It was their land. When they were building something, they were building something tangible. I helped build this car. I helped build this ship. When you're working in the service industry, that those tangible, productive things that you've done it's not so tangible is what I'm trying to say. And so I think there's a certain loss of pride among certain segments of the economy, a certain loss of desire to work in those industries. And I think that's playing a big role. And then it's just lifestyle, right? I mean, 30 years ago, the video games were nothing like they are now. I mean, a lot of people will literally leave school and spend the next 30, 40 years of their life. The number one activity they'll do is watch TV or play video games. The entertainment options are so distracting these days that some people just can't be bothered to go look for work. And as long as they have a shelter over their head and some form of income of some kind, they don't even bother to look for work. We see that increasingly in the US, increasingly in Europe and other parts of the world. So it's a combination of a number of different factors.
All right, it's 9:01. If you don't mind, we'll do one more question. I do want to say that we have recorded this presentation and we'll get it on our tuskedc.com website. It may take a couple days. I'm not sure how long it takes to get the video processed, but probably by the middle of next week we'll have it. So there were a couple of questions, Michael, about the $15 minimum wage, and how do you think that will impact things at the national level, but also at the small business level?
Right. So I'm not against minimum wages per se, but I think in a country as diverse as the United States, to have a national minimum wage is probably counterproductive. I think minimum wages should probably you can set a minimum wage on a national level where the federal government says no state or no local government can impose a wage below this level. But I think states and local government should have a flexibility in where that minimum wage is. For example, labor in Manhattan obviously costs substantially more than labor in rural Mississippi, and the cost of living in the two places is dramatically different. So in places where cost of living is low, where revenue levels are per client relatively low, imposing a $15 minimum wage could be harmful. It does make sense in other parts where living costs are higher. So again, I have a problem with the government going across the board and saying this should be the minimum wage. I do understand you can say this is a minimum national wage, something a bit lower, that would force some governments to impose one. I don't have a problem with the concept of a minimum wage. I just think there should be more flexibility in where it's set in different parts of the world, in different parts of the country, taking into account particularly cost of living factors in those parts of the world. In those parts of the country. So that's my take on that. I think the Democrats felt under pressure to come out with an announcement that they were going to do so on a national basis. But I think what would be more logical would be to set one lower than 15. And I don't know the number off the top of my head. It should definitely be higher than where it is now. But let local and state governments actually determine where then they decide to set their own minimum wage.
Well, Michael, we'd like to thank you so much for this informative presentation, and I'm sure everyone enjoyed hearing what your expectations are for 2021, and certainly out of everyone I know, you're one of the best people to take guidance from with all the work you do doing international research. I would urge everyone to follow up with ISA and read some of the reports and follow Michael on social media. You've already heard it mentioned that we're looking at January 28th of 2022 to hopefully do this again. We'd like to thank the team at Tuscarawas Economic Development, John Kelly and Jason Rickner and Harry Eden. And we thank all of you for participating. And as you heard, this presentation will be on the Tusk EDC website. And we are equipped to send out a copy of the presentation to everyone. So I know we're running just a couple of minutes over, and we hope we haven't inconvenienced you. And Michael, for 14 years now, we simply cannot thank you enough. And good luck as you proceed through this year too. Thank you, everybody.
Appreciate it. Everyone have a good day and stay safe, everyone.
Thank you.